Interest rates likely to stay higher for longer. The U.S. Federal Reserve has signaled that interest rates are expected to remain steady for some time as inflation continues to stay above its target. Federal Reserve Vice Chair Michael Barr emphasized that it is too early to reduce borrowing costs, highlighting a cautious approach toward controlling inflation. No immediate rate cuts. Despite some improvement, inflation in the United States has not yet returned to the Fed's 2% goal. Because of this, policymakers are unwilling to lower interest rates prematurely. Cutting rates too soon could risk pushing inflation higher again, undoing recent progress. Barr's statement makes it clear that the central bank prefers to wait for stronger evidence that inflation is consistently declining before making any changes. Ongoing inflation risks. Several factors continue to keep inflation elevated. Strong consumer demand and a stable job market are supporting economic activity, which can also keep prices high. In addition, global uncertainties, such as rising oil prices due to geopolitical tensions, could add further pressure. These risks make it difficult for the Fed to shift toward a more relaxed monetary policy. Market expectations adjusting. Previously, many investors expected interest rate cuts in the near future. However, this latest signal suggests that such expectations may be too optimistic. Now, markets are preparing for interest rates staying high for longer, possible delays in future rate cuts, a small chance of further increases if inflation rises again. This shift is likely to create uncertainty and volatility in financial markets. Global impact. U.S. interest rate decisions affect the global economy. Higher rates typically strengthen the U.S. dollar, making it more expensive for developing countries to manage debt and imports. For countries like Pakistan, this could mean continued pressure on the currency, higher fuel costs, and challenges in controlling local inflation. Conclusion. The Federal Reserve's message is clear. The fight against inflation is not over. Interest rates will remain elevated until there is solid and lasting evidence that inflation is under control. This means businesses, investors, and governments should prepare for a longer period of tight financial conditions.